I'm back. That's right. That's what the housing market is saying based on the March Honolulu Board of Realtors housing report that just came out. If you like, comment, subscribe, and share, well, you're going to be able to hear about this and so much more on my YouTube page. Well, let's get started with the weekly housing market update. Again, the big three prices. Prices are up. We'll go over that. Inventory is still dragging us down. Inventory is going to have a big effect on our market going forward, and specifically the lack of inventory. And then rates is going to keep our inventory low, and I'll go over that here in a minute. The Honolulu Board of Realtors housing market update for the month of March, and we had a rebound in the median sales price of single-family homes up to 1.087 million, and we hit a new all-time record for condos up to $536,000 new high, which beat the old high, which was in June of 2022, which is when housing prices peaked across the country. Closed sales down for the month, 236. That's a 26% decrease. Closed sales for condos also down about 33%. We'll get into that here in a second. Days on market, right, both of them near or above 30 days for days on market. We'll show that a little bit too. The biggest increase in sales was in the most affordable ranges, 600 to 799,000, the 70% increase year over year. And then the largest group of sales, 25% of all sales, were in the 800 to just under $1 million price range in the month of March. But let's get into the numbers. All right, so we got this. I love this chart here, the monthly indicators. It compares year over year, but also month over month. And if you look, we had closed sales up from February to March in both single-family homes and condos, down though from last year. But last year we also had this time, we were just the market was just getting out of control, crazy. Median sales price, if you look, both up month over month, down like not even a percent year over year though. All right, or actually 5.8% year over year. It's not a lot, not a big drop. Median days on market, all right, obviously, 4 times higher than what it was last year, but rates were still in the low 2s last year in March. But it dropped from month over month. February, 47 days on market. March, 36 days on market. And a drop from 28 to 24 for condos. So I keep talking about the dip and where we're at in the dip, because once we get past the dip, we change from a buyer's market to a seller's market. And depending on what we see next month, we might be in that seller's market again. Let's look at new listings. We have more new listings coming on the market. That is good in both single-family homes and condos, though we are still down from last year at this time. Still not where we were last year. Pending sales, hey, here's my thing. We had an almost 19% increase in pending sales from last month to this month, an 11% increase on condos. Here's my thought on that. That's what we got going on. We're back. All right, we're back like Jack Nicholson in The Shining. Active inventories, and here's the problem. Here's why home prices are gonna continue to go up. Active inventories down, both condos and single-family homes. And months of active inventory overall is up month over month, certainly, but by just a smidgen for single-family homes and steady for condos. Obviously, we're a lot higher months of inventory than last year, but tell you what, we're not going to see that number go up because we just don't have enough inventory. When the home comes on the market, it's going to sell. It's kind of like a high pressure. Right? This is a high pressure market. Once you put the home on the market, it's gonna, and this is what I see happening, especially as rates come down. We'll get into that in a second. All right, once you put the house on the market, you have low inventory, you have lower rates. When you have lower rates, what do you have? You have more buyers. Right? The demand is there. It's just been stagnant. It's been hibernating because nobody wanted to buy at rates that they had. Well, let me tell you, you need to start buying now. All right. So let's look at closed sales. A couple things to look at in this graph. Every year you have a dip in January, February timeframe. You go back in 2021, 2022, you see that. But you look at the dip that we had this year. The dip, it actually started going up a lot sooner, I think. And you're seeing a very high rate of increase already in March. And the big question will be, what is it going to be in April? How many closed sales are we going to have in April? Especially, and we may not have a big increase because interest rates had gone up in February. And that may have been a reason why we might not see a huge increase in April's numbers. But I tell you, I wouldn't be surprised if certainly when we get the May numbers, you're going to see the typical PCS season huge increase in closed sales. But I'm telling you again, if you put it on the market, it will sell. The peak of our market last year was in May, June time frame, and closed sales, look at the increase from January to March. We haven't had this few closed sales since March of 2021, and that is when the market actually really took off. You go back on this chart here, February, March is when the market really took off. It didn't come back down until rates in September, October got up into the 7%. All right, we're already back. We're already back, people, with closed sales. Again, there's just no inventory. When the house goes on the market, it is going to sell. I know we're at over 30 days on market as the average, but that number is going to continue to go down. I believe that it will. Now let's look at the median sales price of homes. This is steady Eddie, baby. Steady Eddie. You might think, oh, we're going to have a crash. No, sir, we're not. No, man, we're not. We've already hit the dip. Look at that little curve. Look at that bowl shape that we have February, March. All right, we're going up. We'll see what happens in April, but I want you to see this. Those people who think that housing market is going to crash, you are wrong. You are wrong. You are wrong. Take a look at it. It's not going to happen. This elevator, ladies and gentlemen, is going up. It's not coming back down. All right, active inventory. All right, this causing me concern. There isn't enough inventory. We're not building homes fast enough. We're not putting enough homes on the market. People aren't going to do that when they don't have nowhere else to go. They're not going to put their home on the market. But now there's incentive because they can get a better rate if they go someplace else. And they're going to start seeing their neighbors' houses start going on the market and selling. And I'm telling you, you see a lot of people at open houses. On Easter Sunday, people are going to open houses. Can you believe that? Again, the reason home prices are going to start going up is because we do not have enough inventory. You add that into the sauce, into the housing sauce, stirring it up, throw in some lower rates. Good. You got yourself a very, very tasty, edible housing market. All right. Next. All right, we're almost done with this closed sales. This graph, this is historical here. And if you look at this, not since 2009, if single family homes, that was when we had the Great Recession, all right, the housing market caused a crash. Not since 2009 have we had so few closed sales for single family homes. But look at that increase, January to March. Huge. Same with condos. Now condos, we dipped lower in condos, but look at this steep rise on condos. Oh my God. Why? Because condos really are affordable. The housing market wasn't affordable for so many people at higher rates, and they didn't want to go from single family home vision to a condo or townhome vision. But you know what? They're not going to have to anymore because the rates are coming down. But it is going to make the market competitive. It is going to make the market competitive. And then median sales price. Median sales price, again, this is historical. Historical. I love this. And it showed two things. One, it shows the steadiness of the housing market. The steady increase in appreciation in the housing market over time. Time equals money. Time is your friend if you own a home. If you're looking to flip, you could get lucky, but the reasonable expectation should be 5 to 6% every year appreciation. But there might be, that's an average, so you will have some years that are less. But typically, and I could show you this, I think it was 2012, I'd have a graph, I'll put this up there. 2012, when the last time that market really dipped, the housing market, the prices dipped, that next year, where home prices shot up 8%. That was when there was a butt ton of inventory. There were a butt ton of homes for sale. There's still high inventory. People were still gun shy back 2012, but you know what? Once we hit that dip and it went up, 8% appreciation. More pressure now because you have fewer homes. You know what? We might see 12% appreciation. That was pretty good. be pretty good at that. Not that we want that. I'm a steady Eddie kind of guy, but hey, if the market dictates it, the market dictates it. And when you don't have any inventory, that's what you get. So that's a housing report for the month. There's a lot of news, and there's a lot of the Nate senators who are saying the market's going to crash. I'm telling you, those people know what they're talking about. Look at the numbers. I just showed them to you. Now let's get into the biggest news of the week. Everything else pales in comparison. It is the consumer price index for the month of March. And this is one of the Fed's measures for inflation. And we had a report come out, and we had a 0.1% increase. The expectation was a 0.2% increase. So the inflation went from 6% down to 5%. That's huge, and everyone's rejoicing. But wait, the core, which takes out food and energy prices, it actually went up. It went up from 5.6 to 5, or 5.5 to 5.6%. And the biggest reason is the roof over your head. It's a toss to shelter. All right, and know that shelter prices in the consumer price index, there is a lag on it by 12 to 18 months. So we're not looking at data now in this report. We're looking at data from 12 to 18 months ago. Those time frames, shelter prices and rent prices were going up. But let's look at this next chart. Actually, I just want to dwell on this for a little bit. Look at the downward trend in inflation. Do you think what is happening, what the Fed has done, is having an effect? Well, it is. It absolutely is. And the core has been steady, going down, not as fast as we want, but the core, which is really what the Fed is looking at, it's going down. And in May, I think we're going to see that core go down from 5.6, maybe closer to 5%, because look at this. This is the measure of each of the individual areas that go into the consumer price index. And you look at shelter, go right across the line. All right, 0.7% increase, 0.7% increase, 0.8%. And then in March, it was a 0.6% increase. So yes, it was an increase, but it was a decrease, and it's showing an overall decreasing trend in the increase in the cost of shelter. So should we continue to see that downward trend in the next report, you're going to see core CPI go down. And that is going to be good news for everyone. That is going to, if the Fed, I think the next CPI report comes out on 10 May. I think if that comes in low, that will maybe cause the Fed to not raise the Fed funds rate again. They really need to stop doing that because, the banking sector, banking industry is still a little tender right now. It's not recovered. And, you talk to the pundits out there, whether it's, Gene, not that I talk to those guys, I just listen to Jamie Dimon or Warren Buffett. Is it Buffett or Buffet? I'm kidding. It's Buffett. A lot of people out there think that we are not through with the banking industry. Lending standards are going to get tighter. Credit is going to get more difficult to obtain. And really, we're not out of the woods yet. That's kind of what I want to get to now, is what does this mean? Couple things. One, the bottom line, the economy is slowing down. All right, we saw it last week with jobs. The economy slowing down. Inflation is coming down. Core not as fast as we want, but inflation overall is coming down. But we're not out of the woods yet, and that's it. All right, hit that big bear. We're still in the woods. We're not out because the economy. We don't know how much pain the economy is going to come under. There's a lot of things. We have prospect of oil prices going up with OPEC cutting back on production and everything else that's going on. The banking industry, again, we don't know what the repercussions of all these Fed hikes are going to be on the banking industry. I think we might just be seeing the beginning, and I'm certainly not painting fear in anyone's head. I'm just innocent, Larry Doss, sitting back, my cup of coffee, and watching everything unfold in front of me. And the trends that I see are not necessarily good from a banking standpoint. So, and then we got to figure out what the Fed is going to do. You listen to the Fed heads. Some of the Fed heads are saying, "Oh, we still got to raise the Fed funds rate." Shut up. All right, stop talking, and just look at the numbers and look at the big picture. It's not just jumps, it's not just inflation, it's everything else that's taking place. Let's let things ride out. We certainly don't need to raise the Fed fund rate. We just need to wait. If you haven't figured this out, Mr. Buyer, Mrs. Buyer, the market has changed. All right, the market has changed. It just got competitive again. You need to be strong on your pre-approvals. You need to be strong on your offers. I had a talk with a client today. He was like, I'm going to go 30,000 under on a $400,000 property. And I'm going to ask the 30,000 in credit. My brother, you must not want that house. All right. You'll have to be competitive now. You're not the only person putting in an offer. I'm looking at you. All right. You're not the only person putting in an offer right now. It's just not going to happen. As a seller, sell, sell, sell. Put your house on the market now. If you are looking to sell, now is the time. Now is the time. Your house may sit for a week, it may sit for 2 weeks. It takes them to sit for 30 days, especially if you price it right. If you price it right, the buyers will come. Buyers will come. That's right, I said it. The buyers will come. That's all I have for you this week. Have a great weekend. Enjoy the Lotte Golf Tournament. It's in our backyard. It's literally in my backyard. And it's great. Some of the best female golfers in the world are having it right now. And don't miss out on it. And it's really cheap to watch, and it's kind of fun. All right, I'll talk to you later. Have a great day. Bye.